Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Tom Oviatt. Tom is the Business Development Manager at YMAC Capital, and YMAC Capital is a mortgage brokerage company that works with financial professionals, including CPAs, enrolled agents, financial planners, and real estate agencies, to originate loans with a variety of mortgage companies. And Tom has been with YMAC, about 12 years now, Tom?
Yep, about that.
And previously he worked as a manufacturer's representative to consumer sales companies like Home Depot, so he sort of got into a different vein here. But as we always say, marketing is marketing.
Marketing is marketing, finance is finance, you're right. It's all about making transactions.
There you go. So Tom and I are going to talk about some important new developments in the area of reverse mortgages. And most of the time when you see stuff on television about reverse mortgages, you're watching some sort of a infomercial or a commercial. So today it's going to be a little bit different. This is going to be really an informational discussion, if you will. And anyway, we think that there's some exciting new things that are happening with reverse mortgages that we want you to know about, but also things to be aware of when you're looking at alternatives. Tom, thanks for being my guest today.
Great to be here, Mike.
Okay. So, Tom, what are two common misconceptions that are around relating to reverse mortgages?
Well, I guess two of the biggest is, first of all, that you can lose your home. And that's not really accurate. The current reverse mortgages that we're doing, and really is the primary one that's available to people, is insured by FHA. So it's a very good mortgage. You really can't lose your home unless you fail to perform some of the things you're required to do, just like in a forward mortgage. And then the other one is just the expense of a reverse mortgage. If I went out and took a poll, what don't you like about reverse mortgages? Most people are going to say they're just extremely expensive. And I just hate to think about spending all that money to obtain one. And so really today, I hope we can dispel some of those rumors, because that's not exactly true anymore with the mortgages that we're able to do today.
Right. So there's been some changes that have happened fairly recently that has brought down the cost when you're dealing with a company like YMAC.
Yeah, we've been fortunate enough to be dealing with a mortgage bank that offers these reverse mortgages, the FHA reverse mortgages, and they've been flexible enough where they allow us to use some of the, they call it yield spread premium, or money that's generated by these loans, to pay for expenses. So in other words, that money, it doesn't go to pay for infomercials, for old TV actors, for origination fees. That money can be used to pay and defray the costs of obtaining a loan, and that can include the title, the escrow, and the real big one is the FHA mortgage insurance premium that's paid up front. So we're able, in many cases, to offer a reverse mortgage where just the counseling fee must be paid by the borrower and the appraisal fee, typically. So it's a big difference than what has been offered in the past.
Right. Okay. So, are there any good alternatives to a reverse mortgage?
Well, you probably remember, Mike, years ago, if you had an elderly client, let's say a person that was 90 years old, we could go into that, we could take an application on that fellow. We could do what's called the stated income loan that was, very prevalent 10 years ago. We could get a loan for virtually 100% of his appraised value and get cash out. Very easy, no problems, could do it all the time. That, of course, that's gone away. So any kind of loan now, the borrower has to qualify for the loan. For elderly clients, especially if they're drawing on their IRAs, it's very difficult to qualify anymore. And plus, you're going to be making a monthly payment. Equity lines used to be used for a just really insurance. If you had any kind of issues, you could draw on your equity line. Anymore, that's just not there. I mean, when we went through the big turmoil, banks were closing people's equity lines, freezing them so they couldn't use them, and they can take them away at any time. So, not a good alternative anymore, especially the latest round of equity lines from most of the big banks require the borrower to qualify with a 20-year amortization instead of the interest-only payment. Now you're going to be paying an amortized payment, and you have to qualify for it. So once again, that eliminates a lot of people from obtaining an equity line simply because they just can't qualify on the income that's required anymore. So there aren't really a lot of good alternatives. I mean, you could go to what's called the hard money or the private money loan, but you'll pay 2 to 4 points up front plus all your fees, and it has to be repaid.
And usually a higher interest rate.
A very high interest rate, yeah, 10 to 12%.
Yeah. Now, another thing, as I understand it, when we're talking about the equity lines, is that you can't have an equity line that's like your first mortgage. In other words, you can't, if you've paid off your mortgage before, now you want to apply for an equity line. As I understand it, that's no longer
many
permitted.
banks won't let you do it. There are some that will allow that, but many banks just say no, we don't want to do that. Or if we do, we will make it very similar to a first mortgage. In other words, you will have to make a monthly payment. It cannot be interest only. It has to be a definite period where it will be amortized. So, in essence, it's just like a first mortgage.
Yeah, you're setting up a new first mortgage.
Yeah.
It's amortized.
Yeah.
Okay. Well, what does it take to qualify for a reverse mortgage?
Well, the good thing is it's very easy to qualify for a reverse mortgage. Number one, you have to be of age, and that's 62 years old. And I'll talk about a little nuance there in a minute. But basically, there's no income required. They pull a credit report, but only to see if there are any federal taxes that are due or any liens on the property that need to be taken care of. Really, you can have credit scores don't matter. Really, the only thing the lender's looking at is the value of the property and the age of the borrower. And that's all that it takes. So it's very simple for a senior to qualify for a reverse mortgage.
Right. Okay. So I guess in some cases I've heard you don't even have to make payments on these mortgages at all. So how does the lender end up getting paid?
Very good question. Yeah, there is no payment required on a reverse mortgage. That's one of the benefits. But you can make a payment if you wish. So here's how they work in essence. Let's suppose you have a client and they have a $100,000 balance on their loan. They paid it down, so they would get a reverse mortgage. So there's a $100,000 balance that's on the mortgage. Every month there would be an interest payment that's added to that principal and a mortgage insurance payment. So each month that is added to the outstanding principal balance, but no payment is required. Now you can see over time, of course, that is going to grow, and that is one of the negatives that HUD says. We have a negative to reverse mortgage. You will lose equity over time. But with property appreciating, that may not be the case. You may have as much equity, in 10 years as you do now, even with a reverse mortgage. So that's essentially how they work. No payments are required. All the interest and the mortgage insurance premium is added each month. The borrower receives a statement that shows them how much has been added to the mortgage balance. If they wish to make a payment, they can make it just like they do now.
Okay. What if the lender goes bankrupt? So, we saw some people that were doing a lot of loans that went away, like Countrywide and so forth. And
Boy,
much
that's
to
exactly
Bank of
right.
America's regret, but anyway.
Yeah, no, exactly right. And that's a question that's probably asked very frequently by the borrowers. They go, what happens if this lender goes bankrupt and I can no longer get any money from my equity? Well, the answer is these loans are insured by FHA. That's why you pay a monthly insurance premium and a big upfront premium, so that if the lender does go bankrupt FHA can take over the servicing of the loan until another servicer steps in. So you actually sign two notes when you're signing for your mortgage, one to the current lender and one to FHA. So it can be very seamless if anything like that happens. So the borrower is very well protected.
Okay. So what are some drawbacks of a reverse mortgage?
Well, okay, that's good. And I mentioned earlier that every borrower that obtains a reverse mortgage must go through a HUD-approved counseling session. Just no way around it. And in these sessions, the borrower will be they'll be told some of the negatives about reverse mortgages. One of those is that they're very expensive. So you have to be aware of that. And like I mentioned, we're able to kind of get over that problem. They have to maintain the home. In other words, they have to keep it in good repair, and they have to pay taxes and insurance. But they have to do that now anyway, so there's really no difference. Another one is that if they fail to occupy the property for more than a year, the lender can call the loan due. So in other words, if there was one borrower and that person went into a care facility for more than a year, the lender has the option of calling the loan due. Now, we have one lady that's been in one for 3 years, and each year she writes the lender and says, it's my intention to return home as soon as I'm well, and they haven't called it due, and there's really no benefit for them to do that. But that is a negative, and they could do it if they wanted to. Really, and that's really the biggest negatives that you're going to be told about in your counseling session. So there's not a lot of difference than obtaining having a first mortgage.
Yeah, I think a thing related to it, before going in is just thinking about, what is your intention, or what do you think is likely to happen? If you think that it's likely you're not going to be staying in your home for very long because maybe you can't take care of it anymore, then maybe this isn't a good option for you. Or if you think it's likely that you're going to need to get into assisted living or something like that. But a lot of people really feel strongly that they want to stay in their home.
Oh, absolutely. The instances like that, now, most of the time, if somebody goes into an assisted living facility, it's not for a long period of time. They're at the end stages of life, and the heirs have probably a plan in place, and they may, in fact, be planning to sell the home upon which the mortgage would be paid off, and the person in the assisted living facility would of course stay there. If you are there and you feel that you're just there convalescing and will be returning to your home, then you can state that intention. But that's typically not a problem for most people.
Okay. Maybe you could explain a little bit more in detail, without making the person a mortgage broker, but anyway, how, again, these expenses get paid so that they don't have to be out of pocket.
Right.
And then how much are we talking about if they do get involved with one of these that they do have to be out of pocket?
So here's a good example. We had a client that came to us about 3 months ago, and they had obtained a reverse mortgage that closed in January of this year, January 2014. They showed us the closing statement, and they had paid $23,000 in fees.
Ouch.
Yes, and here's what that went to. There was a $6,000 origination fee. There was about a $15,000 upfront mortgage insurance premium to FHA, and there was probably about $2,200 in title and escrow charges. So total, it was just over $23,000.
Okay.
And we looked at what he had, thinking, well, there's probably nothing we can do for this fellow because he just obtained the loan.
Right.
But we were able to refinance his reverse mortgage, and we had to wait 6 months. We had to wait until July 7th until we could take the application, because that's a HUD rule. You got to wait 6 months. But we were able to lower his interest rate lower his lifetime cap from 12 to 8%, which was a big plus for him.
Yes.
We were able to eliminate the monthly service charge, which is $30. So we don't have that charge with our loans, fortunately. And we were able to get him more money that he could draw on, just because, and that was really a function that values had gone up in those 6 months,
Yeah.
and that's why we were able to do it. But the other factors, the better rate, the better cap, and no monthly service charge, we were able to eliminate that, and he did not pay for anything. We paid, and it was over $20,000. Actually, it was 18 because we didn't charge him an origination fee. We paid that. The lender actually paid it. So the borrower paid nothing, and we were paid our compensation by the lender as well. So it's say, gee, how is that possible? Well, apparently there's a whole lot of money in reverse mortgages, and there's a big demand for them from the investor side. And you see all these infomercials on TV, which are very expensive, and this is how they're able to pay for them. There's a lot of yield spread premium, as is known in the trade, that can be used to pay for infomercials, everything as far as the marketing goes, and we don't have those costs. So we get paid nicely, and we can pay all the fees for the borrowers, usually, and everybody's happy. It works out great. So will this continue? We hope so, but you don't know. But yet, right now, we have a really good program, we think.
And how much are the actual out-of-pocket expenses about?
Okay, so typically the
yeah.
only thing you're going to have to pay for is your counseling fee, and that can be as much as $150, although periodically different counseling services do them free. They get government grants and they're able to offer these services free, and we've done that a number of times. But $150 would be the max. And then the appraisal is going to be around $485.
Okay.
And that's typically all you're going to have to pay, and we can usually pay for everything else.
So less than $600 in most cases is what we're saying.
Yes.
Okay. Okay, so let's say I get one of these reverse mortgages and then I draw some money out of it. Is that taxable income?
And you know better than me, but from what I know, it's not taxable income. No, they are not taxed on that. That's really equity in their home.
Okay, so there may be a situation where there could be some income at the tail end because there is a debt cancellation that could happen with this FHA insurance if the FHA ends up having to pay a balance of the mortgage, and there is what we cancellation of indebtedness insurance income. But in most cases, that's not going to be the case.
Right. That would be a rare occasion, I think.
Okay. So why don't we talk for a few minutes about what are some different options? What are the different ways that we can set this thing up? Because a lot of people, they don't know there's alternatives, on how they can take this money.
So this is good. Yeah, they have a lot more flexibility now than we used to have. It used to be, and people perceive this, I would get a reverse mortgage and then I'd get a monthly payment from the reverse mortgage company for as long as I occupied the home.
So like an annuity almost.
Yep, kind of like an annuity. Now you can still have that, but that's just one of many options. So you can also take a lump sum at close, up to 60% of what they call the net principal limit, and then you can take the rest the following year. They do that so people can't access everything all at one time, hopefully preventing some scammers from taking people's money. But anyway, you can take a lump sum. You can set it up as a monthly draw. It can be just like a regular equity line. In fact, we have done loans for people that wanted equity lines, couldn't get them from their bank, had no mortgage on the property, and we said, well, we can do this. We can set it up where we get you a reverse mortgage, and it's essentially an equity line that can never be taken away, and all you have to do is maintain a $100 balance, which is very small. So your interest payment is 52 cents a month about. which is great. It's great insurance. And then 5 years, 10 years down the road, should you need to access this money, it's there. And it cannot be taken away. It cannot be closed. It's a first mortgage, and the money's going to be available. So that's a really big plus. Or you can do a combination. You can have take a lump sum and then take a monthly payment after that, and you can change it at any time you want. So you have really ultimate flexibility with these things now.
So I'm just, thinking in my head here. So for example, if you've got a mortgage on the property, one thing that you could do is you could eliminate the mortgage payment for that mortgage by using a lump sum to pay down that mortgage or pay off that mortgage. And then you may have some additional equity that you could use to finance, for example, then an annuity type. So there are some people that, for whatever reason, things didn't work out so well. Their 401k, got decimated in 2008. And they never reinvested. People make financial mistakes. Things happen. But this could be then a backstop then that could provide some cash flow to help you out really for the rest of your life. And as I understand it, you could even have an annuity that could continue paying beyond even the value of your home.
That's true. They pay as long as you're in the home. If you live to be 120 years old, you still get paid. So that's good. And the point you're making, Mike, is really good, because here's an example. We have people that have drawn down on their IRA, just for the same reason you said, lost a lot of value when the market went down. Now, the smart play would be to get a reverse mortgage, and when the market is going up, stop drawing on your IRA. Keep your nest egg as big as possible, so when the market goes up, you're growing at you're growing much more money than you would normally. Then if the market is stagnant or goes down, then you can use your reverse mortgage. So it's a really good financial planning tool.
Yeah, it's just now it's like another little, like you said, it's something to put in your toolkit for financial planners to help out their senior clients.
Exactly.
And in the past, again, we've been very reticent for a couple of reasons. One is we didn't want to erode their equity.
Yep.
And the other, and the concern about those big front-end fees. I think that was a really big one. And so now that we can basically get those fees paid by the lender.
Yeah, it's a big plus,
It's just really a tremendous thing. Now, can I go to Wells Fargo and to Bank of America and get one of these?
As far as you know, Mike, right now the big banks aren't offering reverse mortgages. They got out of this business years ago because of the perceived risk, not wanting to have to foreclose upon an elderly client and facing the scrutiny of the press. So they don't offer them. And you can go to the people that you see on TV, and you're going to pay huge fees because that's just the way they structure them. So it's nice that you would be able to offer your clients a reverse mortgage where there would be very few fees in most cases.
Okay. Now, let's say I pass away and I've got one of these reverse mortgages. What happens after that as far as my heirs and...
Okay, so the lender will typically, once the borrower passes away, the lender will give the heirs 6 months to determine what they want to do with the property. Do one of the kids want to obtain a new mortgage and refinance the reverse mortgage out of the way? Do they want to sell the property and pay off the reverse mortgage? So you have 6 months to figure it out. If you need more, they will grant an extension. So they're very flexible, and they work with borrowers, and it's not their intention to foreclose on anybody because they want to keep getting paid, and so it works out very well. And they really haven't had any problems like that. And because the way they structure them, the banks are in very, very favorable positions. For example, around here, where a $1 million property value is probably on the low end, they cap the value that can be lended on at $625,000, 500. So the bank is very well protected as far as preserving equity in the property. And so the heirs
and
have
it's
a lot
insured
of
anyway. The
options.
bank knows that they're going to
It's
get
insured.
paid.
Yeah,
Yeah,
it's
so-
yes. So it's
So the insurance isn't on for the family. They're not going to get anything from that insurance, but the
Right.
bank is going
no,
to
the
get
bank
it.
the bank knows that they
Yeah.
will not lose on
They're
this.
they're going to get paid, and so so that's not an issue. But I guess the point is the family is going to have some time if they want to keep that home for whatever reason. You know, it's the family homestead, and so for personal reasons they want to keep that home. Then it gives an opportunity to refinance it or otherwise come up with the funds
Absolutely.
to pay off the mortgage. And so it doesn't automatically, that the bank is going to take the home, right away and sell it in order to pay off. And what if the amount that the bank gets is more than the balance of the mortgage? Does the family get that?
The heirs they never owe more than they don't owe anything. I mean, they're not responsible. Let's suppose.
Well, but my point is that the bank is not going to get beyond what the balance
No,
of the mortgage is.
No.
Okay, so the family's going to get the rest of the cash.
Yeah.
Okay, so Tom, we're about out of time. It's gone awfully fast, but maybe you'd like to throw out a final thought here as we wind this thing up.
Well, the thing is, it's always no charge to do a quote and do an analysis and tell people what their options are. So, don't be afraid of asking for that. And there's never any obligation to work with us, as you know. We're here to provide information and ideas and help. And reverse mortgage now is just another tool, as you mentioned, in the arsenal to help people with their financial planning. The stigma of reverse mortgages, I think, is slowly diminishing. They were viewed as the loan of last resort, not anymore. Most people see them as a real nice tool, especially the way they are today.
Okay, folks, we're out of time. Bear in mind, this is something that's available basically from independent mortgage brokers. WIMAC is one of them. There are others that offer this, so you have choices. We'll see you next time on Financial Insider Weekly.